And a lot of people are saying, well, if the Bank of England is pivoting and they're buying, maybe that's why the market's rallying here, is the Fed is likely to pivot. So what are some thoughts regarding that pivot? And really, the thing is will the Fed actually do the pivot like the Bank of England? And I don't know that's certain. We're going to get that in that here, but you got a comment?
I would expect they would do something like that. If bond yields did spike like that on a one day, our market's a lot bigger than the UK gilt market, so I don't think we'd see yields spiking like that. But certainly if something does break, which is obviously a broad term for a lot of things that can happen when the dollar's this strong and you have all these global markets, I would expect there to be some intervention.
Yeah, and I think the market is expecting that. It's basically, we're in that scenario where bad news is good news again, because it's expecting something to break. But I don't know that you can make that call just yet, because there's a lot of things that are going on geopolitically. Yes, sure, absolutely. Europe is in a lot of trouble, and that contagion can definitely make it back to the U.S., which would cause the Fed to have to change course, do that pivot, and start to become accommodative. But let's look at some of the geopolitics. You had a comment?
I just want to say one thing. As soon as they started buying bonds, right, I messaged you and was like, something big's going to happen, right? When the markets love QE.
Yes.
They love a backstop, right? When we saw European markets, UK markets rally 8% since intervention. And so the question was, do you want to participate in that for a bounce from QE, or are the fundamentals there still so poor that we want to remain underweight?
Right, and I think we do want to remain underweight. We'll get into there. There's a lot of structural problems where a rally for Europe is really financialization. There's just more money, so you got yields coming down, as you said. But it's an energy crisis, and that's not going to change the energy. Actually, it could actually exacerbate it, because now you're consuming more energy. And energy is actually probably a decent lead-in to this slide as, well, what is going on there with the energy crisis? We had the Nord Stream 2 that was sabotaged, attacked. By who? We don't know. We're not going to pretend to have an opinion. You can do all kinds of game theory and play out everyone that did it and those same people on why they wouldn't do it. But the facts are that the pipe is no longer there. It's no longer able to provide energy. So on that geopolitics, well, with that dollar strengthening, and then it's going to have an additional reason to strengthen, is because Europe now has to buy LNG from the U.S. And that means they're going to have to purchase dollars to purchase a lot of energy. So that's favorable for the dollar. Well, the dollar is what all energy is priced in. So then that puts downward pressure on the price of energy. One of the reasons that Russia has done so well, despite all the isolation and all the other policies to try to slow their economy, is because the energy prices have moved up. So they may be selling less energy, but they're getting far more money for that. So that's actually been a tailwind for the Russian economy, having higher prices in energy. Well, if the dollar is appreciating, bringing down the price of energy, and they're now having to buy for the U.S., the Fed may consider geopolitics as a long-term strategy and not want to slow the dollar's appreciation. And in addition, a lot of the strategies that are going with Russia and China, which we'll get into, has been done to try to hurt the reserve status or the reserve currency status of the U.S. This has only solidified the U.S. dollar as a reserve currency.